In South Africa, the power utility Eskom is suspending power cuts. And Tunisia has reported marked growth in exports to Libya, while Zimbabwe has between 10 and 15% maize production deficit. Africa power utility Eskom is suspending power cuts. And Tunisia is reporting marked growth in exports to Libya. Also, Zimbabwe is recording between 10 and 15% maize production deficit. Welcome to the program. I'm Ini John Mekwa. This is Business Incorporated. We start from our global space. As usual, oil prices were a little changed on Thursday as investors weighed the potential OPEC Plus output increase. Mixed economic news, conflicting tariff signals from the White House, and news from Russia-Ukraine war. Brent rose 10 cents to $66.22 a barrel, and WTI also gained 16 cents to $62.43 a barrel. In the United States, the number of people filing for unemployment benefits rose marginally last week, suggesting a resilient labor market despite economic turbulence caused by tariffs on imported goods. Businesses are also facing increasing prices and cutting financial guidance due to higher costs that comes from President Donald Trump's tariff policy. In the metal space, gold prices steadied on Friday, on track for a third weekly gain as investors maintain a bullish outlook while closely monitoring developments in the U.S.-China trade negotiations. Spot gold was steady, $3,348 an ounce. U.S. gold futures gained 0.3% to $3,359. U.S. President Donald Trump asserted that trade talks between the U.S. and China are underway, pushing back against Chinese claims that no discussions have taken place to ease the ongoing trade war. Meanwhile, a spokesperson for China's Commerce Ministry states that if the U.S. truly wants to resolve the trade dispute, it should lift all unilateral tariff measures against China. On the geopolitical zone, Trump has rebuked Russian President Vladimir Putin after a Russian missile and drone attack on Ukraine's capital, Kyiv, and that's the biggest this year, and resulted in the death of at least 12 persons. Among others, spot silver down 0.5% to $33.42. Platinum also down 0.1% to $969.65. And palladium lost 1.2% to $943.24. From the ongoing spring meetings in Washington, the World Bank is projecting that Nigeria's economy will grow by 3.6% this year, building on an estimated 3.4% expansion in 2024 as reforms begin to show signs of stabilizing the macroeconomic environment. The latest forecast contained in the spring 2025 edition of Africa's Pulse is more upbeat than the International Monetary Fund's, which revised Nigeria's 2025 growth downward to 3%. The World Bank's projection is premised on improved performance in non-oil sectors, particularly services such as financial services, telecoms, and information technology, as well as easing inflationary pressures and improved business sentiment. However, the Bretton Woods Institution says Nigeria is home to 19% of extremely poor population in sub-Saharan Africa, and that's the highest share across the region. According to the same report, sub-Saharan Africa remains the global epicenter of extreme poverty, with the World Bank revealing that the region accounts for 80% of the world's 695 million extremely poor people in 2024. The managing director of the International Monetary Fund, Kristalina Georgieva, is advising the federal government to improve its tax base to meet its growing infrastructural needs. The IMF boss, who was speaking at a press conference at the ongoing spring meetings in Washington, says a lot can be done to broaden the nation's tax base and reduce tax evasion through the deployment of technology. She also cautions governments across the African region to build buffers to withstand shocks that may arise.
On a path of strengthening your fundamentals. There is still a lot that can be done on the fiscal side to have strength, as I was talking about ASEAN, to have the buffers for a moment of shock. And don't use any excuses around, oh, it's difficult, we can't really go for more tax, because yes, you can. There is a lot that can be done to broaden the tax base and a lot that can be done to reduce tax evasion and tax avoidance. Using technology, as some countries are doing, to chase the tax dollar when there is the foundation for that is a very good thing to do. Second, on the monetary policy side, we no more, as I said in the opening, we are no more in a place when you can look at the book of the central bank governor of the neighboring country and say, oh, they're doing this, I'll do the same, because you have to really assess domestically what are your inflationary pressures and do the right thing for your country. But above all, make it so that the image of the whole continent changes.
One conversation that's coming out of all the trade tariff and the trade war among the big and the emerging economies is the new routes and new opportunities for trade. And that may need redesigning of products. And that's what we're discussing now with product and brand designer Joel Owolabira here in the studio, talking about crafting brand identities to meet the demands of today. Hi, Joel. Good afternoon. Welcome to the program.
Good afternoon.
So things are changing. The world is adopting more AI and technology and all of that. And I think that will also determine the kind of products that should be created, reinvented, if any entrepreneur wants to stay relevant in today's world. What are some of those outstanding features that product designing or brand designing or building should take into consideration looking at the realities of today?
Okay, you need to follow the trends in the tech world today. So there are things going on, like there are things in tech that's actually new, that new brands can actually follow suit. So week in, week out, there have been launches of AI, new AI coming up and everything. Well, as a product designer, there have been some AI tools that I personally have been able to use, like the ChatGPT 4.0, which dropped last month. It's been a very useful tool for me personally, and I've been able to use it in branding some other products.
So having a picture of a brand in your mind is actually different from translating it to visuals for, customers or would-be customers to appreciate. What do you consider in that transition?
Okay. It's very important to know what your customer needs first. So you need to understand, digest it, analyze it, then present it to your own self before working. I personally, I like having a 15-minute schedule, probably a call with my clients first before starting the work. So the 15 minutes call would be conversational, and I'll be able to understand what they want. Although they might not be able to present it in a way whereby I can understand, but with my years and skills of years of experience, I'm being able to I understand what they want. They might not be able to express themselves about. I understand
So it's now up to you to interpret it,
yeah, exactly,
and give a visual representation of what they want. But I learned it also has to do with storytelling. You tell a story with brands.
Yes. Yeah, we tell stories in various ways, actually. When creating brand identity for brands, there are some things we consider, like the vision and the purpose of the brand. So we brand designers, we use this to create a fitting product or a fitting brand or a fitting visual identity that fits to what the brand represents.
And then keeping it a lifetime or long-lasting brand, that's also another thing, because times change, perception change. Now we're talking of AI and technology. How do you create a brand that transcends, time and the different tastes by consumers?
Yeah, I know new things come, new things go, trends come, trend goes. But as a designer, it's always good to create a long-lasting design that no matter the decade we are, it still represents, it still sends the message it needs to send to the users.
So, how would you advise, those who say, oh, perhaps product designing could be my career path? What should they have? What should they look out for?
Okay, let me use myself as an example. I went into this career with the love of designing, like curiosity. When I was young, I do look outside of my dad's car, seeing billboards, flyers, and some posters and everything. So the curiosity in how all those things were made were the thing that were things that made me venture into brand designing and also product design. Although it's a stage, brand designing first, then later I developed into a product designer.
All right, thank you so much for sharing some of those tips with us, Joel Owolabi, product and brand designer.
Thank you.
All right, let's take a break now. When we come back, we'll head to the market to see intraday numbers. Do stay with us. Welcome back to Watching Business Incorporated here on Channels Television. And yes, it's time for the market, but we see that the NGX, at intraday, has lost the 106,000 level by 0.60% at this time. So we've had, well, so far, I think we've had 3 days of positive close. Hopefully, we will regain this, the close of trade, or is it just investors rushing in to take profit before we get back to the bearish sentiment market? But we'll see about that at the close of trade today. But another active market in Nigeria in recent days has been the fixed income market. The DMO has been really busy. We've seen the second quarter calendar, federal government bonds plan to borrow. We see it's less than what they did in the first quarter, and we've talked about, well, what other alternative do they have? If they're borrowing less and oil prices are reducing, meaning that revenue is coming down, where is the federal government planning to go to? And also, what's happening to yields? That could be another attraction to get investors into the market. But let's talk to Ayomide Odesonya. He's a fixed income dealer with FSDH. Hi, Ayomide. Good afternoon and welcome to the program.
Yeah, hello. Good afternoon.
So we've seen the calendar for the second quarter, and it's less borrowing than anticipated, at least compared to the first quarter. What do you think is behind this? Because revenue from oil is reducing, and now we see government reducing its borrowing based on the bonds calendar. Do we know where else or why this is being the path for now?
I think just as we saw in the first quarter, the DMO still oversold. So they sold more than the amount that they had on offer. For the NTB auction that was on Wednesday, they actually oversold by about 314 billion. So we had about 400 billion on offer, but they sold about 714 billion, right? So I think the major reason why they're just putting that out there, it's sort of it's a way of controlling markets. So we saw how, at the last bond auction, so that was the one in March, there were non-compete bids, and so they actually undersold to the market, right? And even at the NTB auction before the last, they undersold as well, and this pushed yields lower. So I'm guessing, the DMO is just trying to send a message to market that they're not, they're not very desperate, right? And so that's sort of keeping yields suppressed. But I mean, looking at what is going on on the global scene, oil price, the budget was actually, the budget was stated with oil price being pegged around 75, and we've seen that decline in recent times to even 60, 65 per barrel, right? So that definitely shows that they should be borrowing even much more, because the deficits will grow larger. But I think that's what we would see how that plays out in the bond auction on Monday. So we have about 350 billion on offer. I expect the DMO to oversell as well. And I actually expect subscription to be quite high on those, because we've seen demand even in the secondary market for those papers.
Yeah, well, I hear you there say that perhaps the DMO doesn't want us to know they're desperate, but we know that the government is desperate for funds at this time because, oil prices are down, our production is even down in volume, and now we see this. But do you see them going to other markets, maybe to raise? I know it's the CBN more when you talk about OMO, talk about NTB. Do you see them looking at other quarters for this funding?
Okay, yes, I mean, one of the things that they did was, the domestic bond, so the domestic, the Euro bond, right? And that was in USD. I know that they've also mentioned that there might be a Sukuk auction, and seeing as a lot of individuals in Nigeria who are restricted to that Sukuk auction, that's definitely a way that they'll be able to borrow large sums. And I believe that they would, try to also borrow those at lower yields. The last Sukuk, which is the 2033's one, is trading around 14% levels in markets, even though other securities of the same tenor are trading around 19, 20%. So, I mean, I'm sure, the DMO would try to sell a lot at the Sukuk auction and raise money from there. So I'm guessing they're looking at things like, the Sukuk auction, and then maybe they're looking to also borrow. They might be looking to do another domestic Euro bond.
Interesting, especially with the Sukuk. I mean, I think there's more confidence around that Sukuk because it's tied to project, and people can actually see the project, the level of use of the fund, and all of that. But don't you think at a point in time in this second quarter, the yields could go up? I mean, if they're looking at all of this, consumers do not have any power to push the yields up one way or the other.
Yes, with what we see, especially with the inflation figure, we saw inflation climb up slightly at the last inflation figure printed. We can also see what's going on globally as well. So, with the tariffs, we can see what's also happening with the Feds, not being as willing to cut because of everything, the pressure on the market, right? There's going to be an MPC meeting in May. I expect that at the MPC meeting, markets believes that they would most likely hold, because initially we felt they were going to cut, but with what is happening with inflation and even globally, we feel that they might just hold, right? If nothing is done to the asymmetrical corridor, which they held the last time, if they do the same, cost of fund is really high. I do see market becoming more bearish and rates climbing up, regardless of what the DMO does at auction. I believe that the secondary market would actually try to push rates higher.
All right, Ayomide Odesanya, fixed income dealer with FSDH. Thank you so much for your time.
Thank you.
Now let's look at other markets at this time. We see Egypt. We did miss South Africa there. South Africa is doing so good, has been on the climb for some sessions. There you have it. So it's up more than 91,000 now, regained the level it lost after its gain 0.51%. Then we go to Egypt, which is closed today, or intraday, yeah, there you have it, 2.58% in the green, 31,640.22. And Nairobi is from yesterday's close, that's what we have, 126.14. We move to other parts of the world now. The Middle East is where we're heading to next, and we see Dubai and Abu Dhabi in the red at 0.7 and 0.1 for those markets. And see other markets in the region, the Tadawul and the Qatar, they are closed for today. Tadawul is green, closed green, as well as Qatar. I mean, it's an impressive close there for Tadawul at the close of trade on Thursday. Asia market is where, no, United States we head to first. And just like Nigeria, it does seem like after those three good numbers and three trading sessions, investors are back to taking profits. So we saw that the stock features were a little low on Friday. It had a 3-day winning streak on Wall Street. So for this is the features before the opening of today. It's in the red 0.53. S&P is also in the red. Nasdaq is also in the red 0.33%. Alphabet did jump 5% after Google parent Magnificent Seven named report a bit on the top and the bottom line for the first quarter. By contrast, Intel also fell 7%. The moves came after a solid week performance. So, of course, we expect investors to take profit. But let's get more on how the market traded on Thursday with our correspondent, Maria Bird.
The U.S. stock market soared on Thursday as the Dow Jones was up at 1.3%, the S&P 500 up at 2.1%, and the heavy tech Nasdaq led the way at 2.7% up, as many investors are hopeful that there could be a relief in some of the tariffs, as China and the U.S. are in negotiation, and countries like India and South Korea are also furthering negotiations around tariffs with the U.S. The U.S. president is hopeful, and it appears that many Americans and investors are hopeful too that this could be a positive impact on the U.S. economy.
Well, if that's sustained, that is, Maria, yeah, because I mean we're seeing red color today, Friday. But let's go to Asia now, where markets rose after Wall Street gained for a 3 straight day. And guess what? It was the tech stocks that rallied. So Nikkei follows that sentiment in the U.S., and we see it looking really, really green, almost 2% at 35,705.74. The Kospi of South Korea have been very active, in the trade talks. That's South Korea. And we see it almost 1% in the green. Perhaps a bit of stability and optimism coming between U.S. and China indirectly, though. That's also fueling into investor sentiment. The Hang Seng is green, 0.32%, 21,980.74. Other parts of Asia markets, if we could have that to see what's happening there, that would be nice. But it seems I'm not able to get that. Oh, okay. Shanghai is red, as well as Nifty of India, deeply in the red. That's for Nifty, but it's still better than the 22,000 level that they had for a bit. That seems to be the resistance level that they kind of struggle with, but we see it comfortable at 24,000. See what will happen on Monday when the markets open. Now let's go to Berlin and see what's happening in less than 2 weeks until a new government will take over in that country. That's Germany. It's not an easy time for all German and the economy. They've been in dire straits for almost 3 years. That's what the data says. And then, hit also by the tariffs that is everybody's problem at this time. But let's hear what Lars has to say. Hi, Lars. Good afternoon. So counting down to a new government in your country.
Yes, Ini. Hi, how you doing? Good to be with you again. It's about 10 days really till we get that new government. And right now, of course, everyone is wondering here, what are they going to do? What are they hedging out to get the economy back on track? And there are a few ideas now just to take, of course, a little step back. The new government will be a coalition of the center-right Christian Democrats that are generally a bit more business friendly. And then there's the center-left Social Democrats that are, of course, more focused on workers' rights. Now, Friedrich Merz, who is the incoming chancellor and election winner, he says that after a few years now under Social Democrats in power, the new budget will show that his party, the Christian Democrats, are in charge again. Now, ironically, Ini, these are really big words coming from a party that actually was in charge for most of the last 40 years and actually did not always do a great job. There was often a failure of forward thinking, investing in infrastructure, opening up roads towards new technology. But, you know, be that as it may, the new government now wants to get Germany back on track by cutting some taxes. Specifically, they want to allow higher and faster write-offs for companies. Those are meant to have an immediate impact in boosting corporate investment, and they're supposed to lead into a more general but modest tax cut to help companies towards being more competitive globally.
Yeah, but cutting taxes at a time like this in the world, last, that seems to be a rare conversation because it costs government money, and we know that governments are looking for revenue at this time.
Yes, that's absolutely right. And that's why it is actually pretty interesting, Ini, to look at all of those options that the government also has that does not cost money. And there are indeed a few options and a few ideas out there as well. Most of them center on changing one or more laws, including allowing employers to be more flexible with scheduling workers' work weeks, something I am sure that Social Democrats will keep an eye on because getting the economy going can't just happen on the back of workers alone. Now, there's other ideas, ending the crippling supply chain laws that have come into effect only over the last few years. They do not only stipulate that companies have to ensure their supply chains are free of human rights violations, child labor, environmentally problematic practices and such, but that companies also have to document all this. It's turned out that following these laws, especially when it comes to documenting every step, it costs companies billions and it really slows down processes. Now, of course, companies are still asked to keep clean supply chains, but they don't have to take extreme steps any longer to follow every part they use down to its very origins. Same idea, cutting down on some bookkeeping issues, some bureaucracy that, of course, has often been promised in the past as well and has never been delivered. So as much as the German business sector would welcome all this, we'll really have to wait and see what the government, the new government, actually gets done.
Yeah, well, we'll count down. It's just about 10 days, and we'll see what they can get done. But it's the last trading day of the week, Lars. What are investors looking at?
It is, and it is, Ini, another beautiful day for investors. We're seeing the DAX up in Frankfurt by 1.5% approximately, but the story behind it is, of course, the same we've seen earlier this week. We've had to step back, of course, these terrible losses after Donald Trump started this global trade war, and over the past few days, he was apparently pressured by many of his advisors, as well as by very influential and very rich CEOs in his own country to dial it back. And dial it back he did, and with his recent rhetoric more toned down, markets are getting a bit more optimistic that all we've heard was just talk. So investors really are trying to get back to business as usual, and right now it's really looking good. Of course, Ini, and I've said that many times before, markets don't like chaos, and after the chaos we just had to endure, a bit of uncertainty will linger, but for now and for today, I can tell you that here at the stock markets in Europe, the buyers are back.
Yeah, well, I hope that will give us a great weekend, Lars, and then we'll deal with the hassles of next week when it comes.
We'll do that, Ini. Thank you. Good talking to you.
Same here. All right, now let's come back to Africa, starting with South Africa, where the finance ministers raised concerns about deepening vulnerabilities in emerging markets and across the African continent, calling it a pressing challenge. He made the remarks while attending the second G20 finance ministers and central bank governors meeting in Washington. Key topics on the agenda include the replenishment of the African Development Fund, high cost of capital for African nations, and ongoing reforms to the international financial architecture. There was no official communique issued after the meeting, and the minister offers an explanation for the decision.
No, we took a conscious decision even before that if we don't issue a communique, the standard practice since Indonesia after the Russian invasion of Ukraine, you will recall, there's been difficulty in the finance sector to issue a communique since then. But the standard practice we've established is that in the absence of a communique, we issue a chairman's statement. In this regard, we took a decision as the presidency that in this particular session, we're not going to issue a chairman's statement. We'll do that in July.
But still in South Africa, that suspension of VAT hike has been gaining reactions. We have joining us now for that Willie Alcom, Democratic Alliance member of a parliament in South Africa. Hi, Willie. Good afternoon. Do I say, well, the people's voice have been heard. There was a protest against the VAT hike and the government has suspended it. Does that sound good to you?
Yeah, good afternoon and thank you for having me. We had this whole issue surrounding the increase of VAT in this country. We are in South Africa already overburdened when it comes to paying taxes. And the Democratic Alliance, our party, made it very clear that we will not support a budget that will have further tax burdens on the people of South Africa. South Africa does not have an income problem. We've had an expenditure problem over many years, and we need to not tax burden the electorate any further. So the Democratic Alliance did not vote in support of this VAT increase. And after many weeks of to and fro, the Minister of Finance yesterday announced that he will withdraw his VAT increase. So it's not only a win for our party, that is not what it's about, but this is a win for every South African that cannot afford to pay more taxes. And the Democratic Alliance has fought this fight on behalf of every South African. We fought this fight in Parliament. We fought this fight on the streets with every South African that supported us in this. But we also fought this fight in the courts itself.
Yeah, but I mean, is this a permanent solution? Because the reality is governments around the world need more revenue now. These are trying times for economies. So how do you find a balance in South Africa? You do not want to burden the people with more taxes, but the government needs more revenue.
The problem that we've had in South Africa over many years is that our spending became totally out of hand. If you look at your own finances at home, every viewer out there know that when you do not have enough money, you've got one of two choices. Either you can try and raise your income, or you must check your expenditure. We've got so much projects in South Africa that government paid money towards that over the many, many years have not yielded any results. And what we have proposed is to look at how we can cut costs, not on essential services, but on duplication of spending, and there's quite a lot of that cost.
Could you give us an example, Willie? You said there are duplication of cost. Could you give us an example of that?
Let me give you an idea. We've got the CETAs in South Africa. CETAs we pay in the vicinity of 24 billion rand every year. They're not yielding results. We've got many instances where you've got overlapping of projects where you've got 7 employees in a department or in a project, but you've got 8 directors. It's just top heavy. The Democratic Alliance have put measures on the table that can immediately lead to the cutting of in the vicinity of 30 billion rand in cost. Then the receiver of revenue in South Africa, the commissioner, Mr. Edward Kieswetter, said that if the receiver of revenue can get an additional 4 billion rand, which we have appropriated to them, they will be able to increase their collection capacity from 63 to 67%. And that 4% increase will amount to an annual additional income under current tax laws of roughly 60 to 80 billion rand. So if you take that 60 billion rand and you take the 30 billion rand of savings that we've put on the table, we're talking about 90 billion rand. The 0.5% VAT increase that Minister Godongwana wanted to put through would have amounted to an additional income of roughly 12 to 13 billion rand a year. So on the one hand, you've already got savings and additional income with regards to collection capacity of roughly 80 billion, 90 billion rand. And on the other hand, you want to increase taxes that will amount to 12 billion. It just doesn't make sense. South Africa, again, does not have an income problem. We've got enough income. We've got an expenditure problem, and we need to direct spending towards service delivery and not towards putting money and benefits into the pockets of the executive.
All right, so Willie Alcom, thank you so much for that. We do hope that the government will also look the way, of dealing with those expenditure problem, as you call it. Thank you for your views.
Thank you very much.
Well, we're still in South Africa, where the utility Eskom, a power utility company, that is a suspended load shedding following the recovery of approximately 2,015 megawatts of generation capacity, an anticipated drop in electricity demand and adequate emergency reserves. Eskom had announced the implementation of stage 2 load shedding from 4 p.m. to 5 a.m. on Friday due to higher than expected demand, the loss of generation units, and extensive planned maintenance. Eskom spokesperson says that the planned maintenance was ongoing to prepare the system for increased winter demand and meet regulatory requirements, as well as ensure environmental compliance. The Tunisian Export Promotion Center has revealed a substantial increase in exports to Libya, exceeding 18% growth between 2020 and 2024. According to an official statement obtained by Libyan Express, Tunisian exports to the Libyan market generated an impressive 245.2 million Tunisian dinars in 2024, and that defies regional economic headwinds. Mechanical and electrical industries dominate the export portfolio at 37.2% of total export, with miscellaneous industries following at 35.5%. In Zimbabwe, most production is expected to fall short of national requirement by between 10 and 15% this season, and that's because of prolonged dry spells. According to the World Food Programme's March Situation Report, the 2024-2025 agricultural season was marked by uneven rainfall. The report says that 7 regions received above average precipitations, while northern and eastern areas faced delayed and erratic rains. And in Zimbabwe, the African Development Bank says that the country has proposed seeking $2.6 billion in bridge finance to help it clear arrears owed to international financial institutions as it attempts to break a debt impasse dating back to 1999. The Southern African nation owes about 60% of its $21 billion debt pile to external creditors, including the World Bank, Paris Club, European Investment Bank, and the AfDB. The debt has kept Zimbabwe locked out of global capital markets since it first defaulted on payment a quarter of a century ago. And in Kenya, National Treasury Cabinet Secretary John Mbadi has announced that the United Arab Emirates will disburse the first installment of the $1.5 billion, that's about 194.6 billion Kenyan shilling, to Kenya. Mbadi revealed that Nairobi will receive $500 million next week, a month before the end of the 2024-2025 financial year. The President, William Ruto's administration, aims to expand its external financing alternatives after the 4-year International Monetary Fund program came to an end. And now let's head to the crypto space now with Olumide Adesina. So we see there's a return of the green color to the market, at least on Bitcoin. It's gained about 2,000 between yesterday and today about this time. So that's 2.15% up. Ethereum is also up, even though we've seen it drop from the 1,800 that we had about this time, but it's about 2% up. XRP, BNB, Solana, they are up. We have Olumide Adesina now joining us on the program. Hi, Olumide, good afternoon.
Yeah, good afternoon, Amy. Thanks for having me.
Good to have you. We see the greens. I mean, we've had a lot of, I think, more greens this week. Are the fears over? Are we counting down to the 90 days, or we're counting down to the crypto dinner by President Trump?
I think this is a very exciting market. Looking at the fact that Bitcoin had a low of 74,000 and it's up about 94,000 as we speak. Really 20,000 plus difference really highlights the fact that institutional belief around the asset class and increased inflows in the market on the longer spectrum, particularly this month, has helped the market. Also, recall that President Trump had tamed anxiety in the market by highlighting he wasn't going to sack the U.S. Fed chief, and also he was considering dipping down on the aggressive Chinese tariffs in play. So that definitely brought in risk appetite movement, and you could see that asset classes, including many altcoins, going up. However, concerns still remain very strong because you need to understand that a lot of outlooks out there, from JP Morgan, Goldman Sachs to a couple of top economists, saying that the US would likely hit a recession. And the body language of the US Fed has suggested that lower interest rate will definitely take some time. So while the fundamentals look quite solid in April, on the mid-long term spectrum, it's still a very cautious outlook.
Yeah, but we're seeing, I mean, maybe sensing is the better word to use, a bit of optimism between US and China. Doesn't that also, bring some calm to the markets?
That's what I said earlier, but you have to look at things in a very longer spectrum. And if you understand Trump's body language, he's someone that changes his mind so fast. Just look at within a span of 3 months since he resumed, the market has suffered a lot from inconsistency and very aggressive uptake. So while you could say that definitely that brings some positivity, you need to understand that these asset classes can drop by 10-20% in an hour. So it's really a more cautious outlook. But I think Bitcoin has affirmed its space in the crypto market dominance level quite high. Ethereum seems to be one of the biggest losers, despite the fact that it has recovered to 1,008. If you understand where Ethereum is coming from this year, this is an asset class that had a high of 4,000, still struggling below 2,000. Solana also, but Solana's recovery has been faster than Ethereum. Solana had a low below 100. Now Solana is above 150. So it seems like 50% from its low. Ethereum seems like 25% from its low. So I think it's a very dicey situation for Ethereum and some coins. So it's very fluid to say that investors should be cautious.
All right, I guess we all have to be cautious at a time like this. Olumide Adesina, financial markets analyst, thank you so much for your time.
Thank you very much. Yes.
All right, so that's it on the program. Thank you so much for being a part of Business Incorporated. Do remember that you can watch Business Morning and Business Incorporated at any time on our YouTube channel. You just have to relive the experience. It's going to be a restful weekend, hopefully. I'll try to make it so, but before then, I'll see you tonight during the stock market report. I'm Ini John Mekwa.